All right. Good morning and welcome to today's WASDE 360 webinar. This is presented by AgriSampo North America's Producer Marketing Information Services team of Brooks York and Sterling Smith. So we are so delighted to have you join us today. Brooks and Sterling are going to provide a look at the numbers as the USDA releases this report live here in about 15 minutes. The session will be recorded and available in an upcoming Daily Market Outlook email. So if you're not getting that, be sure to send us a note at marketinginfo@sampointernational.com, and we'll make sure you're signed up to receive those reports, those emails that come out every day. We also have a little box here that says chat and also one that says Q&A. So if you have any questions throughout the release of the numbers, or as Brooks and Sterling are making comments, please be sure to put those in that chat box or in the Q&A, and we will try to get those answered during today's presentation or possibly in an upcoming DMO, and we will try to reach out to you separately. So I'm going to go ahead and pass it off to you guys. Let me know what you need me to do. Okay?
Perfect, Christy. Thank you. I'll just kind of set the stage for the event today. So we find ourselves in great markets. And, you know, we look around and normally when we have a blip in supply, I don't know if you've been reading the DMOs that I put out over the last couple of weeks, but if you haven't, I'm going to back up and like most stories, you know, they don't unfold in 30 days. This one actually started long before we ever knew it was starting. And it started a couple of years ago with the preponderance of prevent plant acres we had in the United States. We had around 16.1 million corn and soybeans. In 2019, that was that really wet spring. Some of you probably got familiar with prevent plant that year. It didn't really affect things. It decreased our supply. If you remember that year, we planted 76 million acres of beans. So it started to set the stage for what we're seeing today. You go back 1 year, and we were told last August we had a few more prevent plant acres in 2020 than we anticipated, around 6.1 million corn and soybeans together. Now, normally, if you kind of take an Olympic average, we're looking at around 2.7, 2.8 million combined. So several more acres were missing from the landscape in 19 and 20. Add the derecho in Iowa last year. And even after all these things happened, demand was so poor as we started into COVID worldwide that, you know, we don't really know what we lost in Iowa, but maybe 450 to 550 million bushels of corn, not just from the derecho. If you're up there, you know, Northwest Iowa was hit pretty hard with dry weather last year. So we start to set the stage. Even with all of that, we didn't have a problem. We're making ends meet. The balance sheets looked pretty good. And all of a sudden, we started looking at some prolific demand. Domestic demand back on track, whether it's ethanol, whether it's domestic feeding. But of course, the big catalyst was China. And whether it was a result of the trade deal, whether it was a result of trying to satisfy the populations there, we saw exports just be incredible on corn and soybeans. So we're in a situation today, and the markets are zipping higher in the old crop months, especially in beans. And I'm going to ask Sterling for an update here in a second. But we're in a situation right now that we see that even with maximizing our acres in the United States and some pretty good yields, we can plug in 180 bushel the acre on corn. We can plug in 50, 51 bushels of beans. A single year of high acreage and good yields probably doesn't fix this problem. So we start to look at the usage side of things. And that's what a lot of our conversation prior to officially starting has turned around. And we talked about China and the export program. In regards to soybeans, Sterling, we kind of got that one in the bag. We've kind of successfully exported those beans. Corn was in question. And I think, you know, if you went back to a few different WASDE meetings, you were probably a skeptic of how much corn might go to China, what might get canceled, but we've got a situation on ourselves in Brazil. And I think to set the stage for this report right now, you might tell us what's happening to that corn crop in Brazil, how it affects U.S. Corn exports, and then we've got some numbers out of CONAB on production prior to the WASDE report here. Tell us how Brazil is a catalyst and what we might see today.
Well, if we want to look at the CONAB numbers here, I'm going to bring those up on my screen here right now, and you can see corn came in at 106.41 out of Brazil. And CONAB's last report was at 108. There's an outfit called Ag Rural down in Brazil, and right now they're at 95 million tons. So CONAB can still revise this number down. That's the first leg of this, is that we probably are still looking at seeing smaller numbers. You know, that 95 number, maybe we see around 98. The biggest thing that I tell you about corn we saw the last 2 days in export sales. China has come in and they bought 2 million tons of corn for next year. They only canceled maybe 300,000 tons out of the current year. That's a big net gain. That is telling that China is probably concerned about how much corn they're going to be able to get out of Brazil this year, and also tells us that they are interested in coming back to the table next year. And yes, I was completely skeptical about how much corn China was actually going to take. But clearly what this tells me is we're seeing a paradigm shift in China, and we're seeing a revolution in their hog industry. And they're going to be feeding more hogs all the time. And with that growth, and even with China, you know, the ideas are they're going to produce even more corn. They still think they're going to need this corn. So that is going to be something that's going to be a big shift. And again, we're not going to be able to work this off with this year, fence row to fence row this year. I did the balance sheets. I struggled to make them balance for soybeans. So, and with corn, you know, the carryout number, again, they were in that lower tier. So our room, our margin for error here with the crop at full acreage isn't very big. If we're under full acreage, we have no margin for error with weather.
Okay, I'm going to stop you right there. You said something that I want you to go a little further with. What do you mean you can't make the numbers work on the balance sheet in regards to soybeans?
What I did was I took the prospective plant acre number, and then I took the demand numbers from the Outlook conference. I threw them through my spreadsheet, and it came up with a negative carryout. Now, the USDA, you can't have a minus number of beans in a carryout. You can have 0 soybeans, but you can't have a minus number. Somewhere you have to stop exporting them, you have to stop crushing them, you have to stop doing something with them, or you have to import soybeans to cover it. So right now the math did not pencil, so I took the acreage number, pushed it back up to where the Outlook conference was, which I think is a much more reasonable number than the prospective planting number. Then I balanced, but I didn't balance very well, meaning I came in, you know, with an ending stock number around 120, which is tight. And that was using a pretty healthy yield. You shave half a bushel an acre off of that yield, all of a sudden, well, we're back getting, you know, a 30 number, a 40 number for a carryout, which I don't feature us having a number absolutely that low. Again, price will do something to destroy demand on that. But what that does mean is prices are being well supported. The other thing that I think is interesting, soybeans have been up sharply the last 2 days. That is not normal behavior in front of a WASDE and a CONAB report. Normally, you see the Friday before, a couple of days before, guys take the profits, square up their positions, get to where they want to be, and they kind of let it sit. We haven't seen that at all the last 2 days, which I think is very, very interesting.
So, Sterling, let me jump in real quick because you mentioned something. You said unless we bring in beans to the United States. Now, normally we bring in 20 to 30 million in any given year. They usually come into the East Coast. There's some press releases, some rumor, not press release yet, some rumors out there in maybe the last 20 hours that a couple of big commercials out of the U.S. have purchased a significant number of beans. Now, significant number of beans. We got to be realistic here. At this point in time where we're at logistically, those beans probably can't add another 30 to 35 million. That would be the very most that we could probably bring into the United States between now and our harvest. And it looks like of what's been purchased, and we don't know exactly what that is yet, some of them will come up the river system, the Mississippi River system. Some of them are probably going to go to East Coast processors just to supply that feed demand out there. But we're not getting as excited about importing Brazilian beans as we did back in 1997. In 1997, we were seeing cash prices in the May, June time period. It's kind of interesting. We saw them at $9.07 in Mount Vernon, Indiana, the first day I ever started working in the business. And I had farmers that joked around because by fall, beans were back down to about $5. And they asked me, they said, what was the bean price the day you started? And I said, well, I think it was $9.07. And they said, well, you've done a number on the bean market. But this import situation we're seeing right now probably is not going to be impactful like it has been in the past. Would you agree with that?
I would agree with that. One, we have to think about the logistics of this. You bring beans in. How far north can you really take them? How far north do you want to take them? You don't want to take them all the way up here or even further up, maybe into Minnesota. But, you can see that definitely in the South. I think the East Coast is going to be hungry for those, again, simply because of logistical issues, be it, issues with the railroad, whatever. Diesel fuel is through the roof. It's up another 10, 12 cents a gallon. So trucking these things is not going to pencil. So I think we see, we need to watch plant shutdowns. I'm going to be really watchful for stuff around here in points north of me, simply because they're not going to really want to move those beans that far. So I don't know that we're going to be able to make that big of an impact on it. Ethanol numbers have been pretty good, so where guys can substitute DDGs, things like that, maybe they're going to try and maybe we'll see something heat up a little bit with that.
So we've just got a couple of minutes here, about 3.5 minutes before we get out here. Let's summarize our situation. We're not going to probably know much more about acreage today. We have no idea as to yield. So as far as production goes, it's only a guess that we can throw out there. As far as usage goes, number one, I put this in a DMO. Very unlikely for this to occur. What could the huge surprise be? It would have to be some type of political strife that we're seeing with China. I would not anticipate that. That would be like a 1% chance if we saw something catastrophic to an export program going forward. We can't plan on anything like that. That's kind of like planning on drought and depression. You're going to be waiting a long time to experience those things. Number two, though, you mentioned it, Sterling, we need to watch soybean processing, the crush number that's put out in usage. That's probably the most likely number that can get manipulated. If you had to pick a third one, we've kind of sat here and argued that exports are solid. Is it domestic feed in regards to corn, or is it ethanol? Which one do we need to watch thirdly?
Thirdly, I would watch ethanol. I think, we can certainly worry about the feed numbers. Cattle prices are really pretty good, and I think there's going to be some supply rebuilding, so I'm not worried about that. One variable that's completely unique for this year is old crop exports for corn. That number can change. It may change. It may go up. It may go down. It may go down one month. It may go up the next. But that will affect the new crop balance sheet. We haven't seen that before.
That gets back to your Brazil comments. That's where that Brazil corn crop comes in. That's what is going to have so much impact on what we've got the next 90 days on corn exports. Am I right?
You are exactly right. And the other thing that we want to think about here is, the Chinese import demand has been really good. It's been right there. Suppose we start to see that creep up a little bit. All of a sudden, we're at the point where you move 100 million more bushels one way or another on that balance sheet. That's going to have an outsized effect on price. And the next thing, the funds have been long for all this rally, but they got long before it went up. Usually, we see the funds driving up price. The fund still has some room to buy. So the fund behavior, I'll give the guys on Wall Street a little bit of credit. Apparently, when I was out in New York, I taught them something. But they seem to have handled this move a little bit differently. And then we have to start thinking about weather risk premium, but we won't worry about that today.
I want to jump in very quickly because I'll forget this once we start getting the numbers. One thing that we are probably seeing is we're probably seeing some wheat rations thrown in where corn would normally be. I'm hearing that especially on the poultry side of things. We may see a little bit of surprise there. I see I've got George from down in Southern Illinois. I know he's been to some of my meetings face to face on here, and Sterling mentioned the speculators in this market. They've been long an extraordinarily long time. Nearly every position is profitable.
2 seconds.
And 2 seconds, and I'll
here we go.
Out.
Corn
right,
way above expectations.
Take it away.
1507. So that's a big number, big surprise. Soybean ending stocks at 140. The survey was at 133, so we are right down the line with that. Cotton ending stocks, there's a big surprise for you. 310, that's way under. That's a big move there. Wheat ending stocks, 774. That is a little bit under. I was looking for about 700, so that's a little bit of a surprise. No big things on yield here. The production numbers for soybeans at 4405, again right in line with the street. Corn production, pretty much right in line as well. So not a lot of big surprises here.
So Sterling, let me give you a little market update right now. We are trading very, very quickly electronically. We've got new crop corn reacting down about 5 or 6 right now. It was down double digits, about 12. It looks like it's recovering. Actually, despite, and I'm gonna call them on this. Despite those ending stocks going up on beans, I don't think anybody believes that number. I don't. We're seeing a rally in new crop beans. We're up 22 right now. Old crop beans up 45 cents. Wheat, that 774 number on wheat, we're down about 10 cents really across the board. Kansas City down 13, Chicago down 13. But I think everybody right now is going to call the USDA on the soybean carryout 140. It went up. I don't think there's anybody that believes that. The trade certainly doesn't. We're up 24 cents, 29, 30 cents right now. So we're seeing beans probably react the most, and they're going in the opposite direction of the fundamental news that was released.
Yeah, that tells no one buys the 140 number. And again, we've got so many moving parts. This is just, you have to plant a flag somewhere in a report. This is that flag being planted. And, the difference between 140 and 120 is not much. So
the 1.5 billion carryout, and I know we go through these numbers so quickly and we kind of throw them out there. Essentially, the survey prior to the report showed about a consensus of about 1.3 billion bushels of corn that would be left in our bucket here in about 3 months to carry over to next year. We're saying that now, today, the USDA is at 1.5. Sterling, I think you and I had talked earlier in the week, and we were kind of thinking maybe more along the lines of 1.1 billion. I don't know how long corn will stay in the red today either. I don't think that the traders will buy that number. The only way, in my opinion, because it has not come from usage decrease, the only way that 1.507 billion is correct is if we had a higher yield last year than what we thought we did. By this time, I think we've got those numbers digested. I don't buy 1.5 billion.
No, and here, you got a yield at 179.5. Okay, that's a trend line yield. You're going to have to pitch a perfect game to get that. You are with the acres, you're going to have to pitch even better than a perfect game. You're going to have to strike out every hitter to get that number. And, and you just shave two bushels an acre off of that. 177, tremendous yield. All of a sudden, that number shrinks meaningfully.
So right now, we're seeing corn, it's selling off a little bit in the new crop months. We're down 14. Beans cooling off as well. We're seeing, I think I just mentioned, November beans were up 30 moments ago, and right now we're up 13. Old crop is still very, very strong, and wheat losing a little bit of ground, down 12 to 16 across most indices.
Well, I think some of this, and where we finish today is going to be really important. The market always has, there's algorithmic trading that goes on. Machine sees a number of machines, fire orders. Okay, that's one part of this. Then everyone sits down, they pull out the report and they dig through it. And that's when the real thinking and the real trading goes on, is what happens here, 15, 20 minutes from now is probably going to be a little more clear picture of exactly what people are actually thinking. And two, we came in here with some pretty good long fund positions. We got guys who are taking profits. My buddies on Wall Street here, the stock market's getting knocked around pretty good. If you got money made in the grain market, you might want to take a little bit of that to the bank, because there may be some stocks you want to buy in here.
So I'm gonna interrupt you right there, because that was kind of the point I was making. And I'd mentioned George down there in Southern Illinois. I think he came to a meeting of mine in Allendale about a year ago, and we talked about prices were terrible. What could you do? We looked at price floors. That same theory holds true, but when you look at the price of put options versus selling futures and buying calls, you're going to lean more towards selling futures and buying calls. Sterling, do you think these specs that are in the market that have been long for so long, do you think they have artificially pumped up that put market right now to where they're placing some stops underneath this thing just in case?
Well, here, I've been an investor and trader for 30 years. You got money made coming into a report, and I don't care if you're trading IBM or bond futures, sell calls, buy puts to protect your position. So you can gas up that premium artificially. Your calls are covered. The market goes up, great. If it goes down, you're covered for free. When I break down those COT reports, I can tell you some fun guys have been doing that. And it just makes sense. It's practical, intelligent trading. So that is probably gas that up. The good news is we're getting through, we're getting into a rollover period, and we've got some changes and some things moving in the market. Maybe, as things settle down, maybe over the next couple of weeks and the market stabilize a little bit, that volatility will come back out and those puts will be a little more friendly.
Yeah. That's the thing right now. It feels better to buy a put and have the right to sell futures rather than actually having those futures sold with the right to buy them back. I think most farmers agree that that's a more comfortable position, but right now it's a little bit more expensive, and I think it is primarily because of the spec positions that are out there. Sterling, I know we've got some folks from the Delta in here, and we talked a little bit about that cotton number. You've been bullish cotton for a while, and I don't have those quotes up. How is cotton reacting to that reduced carryout estimate?
Well, I think my cotton is probably on a delay here. So right now, cotton, this is a delay. So it's currently, I'm still showing it down a little bit, but the report hasn't taken effect. And this is something, this can take time. Cotton, it trades a little bit with the stock market, and the S&Ps are down 65, down 1.5% right now. That may keep some pressure, but I still like the cotton idea. That 310 number is tight. How is that weather in Texas going to play out? We've seen it get a little better in spots, but not so much. But again, we're seeing people being willing to spend. We're seeing reopening. We're talking about office rental space going up. Guess what? You're going back to the office. Buying some new clothes will be in there. So I think there's a good burgeoning demand idea globally for cotton here. And I think that number did come in as a little bit of a surprise. It was definitely under the survey. And let's take a look here at our global numbers here real quick. If you like, we can pop those up here real quick. Right now, the soybean, let's see what our soybean ending stocks number. Notice that 89 was the survey. We came in 91, so we were a little chubby there, a little bit over expectation, a lot over expectation on that corn number. So there's obviously some ideas, and the USDA may not have quite caught up with the CONAB numbers yet. I'm going to have to break the report down and see exactly where they placed Brazil and Argentina on those numbers. And the world, the world wheat number actually went up. And this is probably more important for wheat. Right now we're at 789 versus the last run at 776, and we're a little bit above what expectations were. So I think that is probably pressuring the market. Now, cotton ending stocks down from 93 to 91, and we came in under expectations there. So even despite the stock market having a little bit of a problem here, I do think this report, if I had to pick one most favorable, I'd say cotton.
You know, I'm glad you brought those world numbers up. I've been thinking about this the last couple of days, Sterling. I think that, you know, we've done these WASDE 360s now since December, and we largely focus on domestic supply and demand. And I think, you know, over these next 3 months, it may actually, our focus may very well be world supply and demand. World supply and demand numbers have kind of come secondary to moving our markets versus domestic. But I think in the next 90 days, it may very well be that this WASDE report we have in June is centered around world stocks rather than U.S. stocks. I mean, and to kind of explain that logic out there, exports out of the United States, specifically, you know, on soybeans, have always been strong. We've seen corn storm on to the forefront now with exports, and I think it just changes the game to where, like you mentioned on wheat, we're no longer looking at that, you know, at 774 carry out in the United States. We're going to look at it more from a worldwide perspective, especially when we hear of imports coming into the United States on soybeans.
Yeah, and if you look at the Friday Afternoon Marketing Club, I incorporate some French numbers. I'm going to be adding in more European numbers on that because that is probably going to be just as big a driver, if not the biggest driver. How weather plays out in France, how it plays out in other parts of Europe is going to have a big impact on the market, particularly when you look into those quality wheats and you look at Durham.
So we're all probably going to get a lesson in looking at all the different classifications of wheat and the all wheat and the world supply numbers, which is not something that I've really concentrated on here over the last few months. I think we're all going to become more familiar with those from a marketing perspective. So we got a lot of agents out there. I'm gonna preach this as we end. I think a lot of us, whether you know you're an agent or a farmer on here, we think of our crop insurance policy as kind of being in the doldrums right now. We don't think, you know, we're not seeing a lot of claims. We don't have a discovery price period. It's something that we've got. It's nice to have. And unless you're experiencing some replant, things like that, we're not using it. I'm going to tell you this, and I believe this. I believe that today, this minute, that the crop insurance policy we holds as much value for you as it ever has, even in that big claims year. And I'm going to tell you why. We have the opportunity right now, and I've been doing this for 24 years. I have never seen this opportunity at a May WASDE report release date to lock in profitable floors at these levels in almost every commodity out there. Now I say lock in floors. I want you to have upside. You can tell from what Sterling and I are saying, we have got a bullish bias on the markets. These runs only last so long, but we think we've still got some ways to go. I think if you ask both of us, but locking in a profit and a floor, how does that have anything to do with your crop insurance policy? You know what? I've been on both sides of this. I've been a seller, I've been a buyer, and I've seen things done right and wrong. If you lock in floors with upside right now, and that market runs up and you have a failure, I know we've got some folks, I see Mike on here from North Dakota. I know we've got some dry areas in North Dakota. You don't want to sell anything here, but you certainly don't want to take less. Put a floor on. Have upside. If you are forced to buy back these contracts, whether it's with a commercial elevator, whether it's in your brokerage account, remember, if you've got that harvest protection option, you're going to get that average of new crop futures in the month of October. You're not selling $6 corn and having to buy it back in a $9 market if you have the upside protection. It's important to remember. You'll have some following of the market up. Nobody likes to write the check that you're given from the insurance company and simply hand it over to the commercial elevator or hand it over to your broker. It doesn't feel good. if you've got the upside protection, you're going to follow that market up a certain way. It won't be one for one, but you'll get some relief if you have a disaster on your hands. So most people on this call, most farmers I talk to, they're in neutral right now. They were prolific sellers up till about 4 weeks ago. They've slowed down just a little bit as the markets run. They've been right so far. I'm telling you, be diligent here. Use your crop insurance policy as it's designed to be used. Be cautious, be conservative, place your floors, make sure you've got some upside out there to protect yourself. You've got insurance guaranteed levels on bushels in most cases. We need to take some small bites through here. Now, I wouldn't get crazy and do a large percentage at one point in time, but we certainly don't want to be inactive. We don't want to sit on the sidelines and be passive. It's time to do something right now. Sterling, any thoughts to add to that?
Not directly to that. I think you put that very well. One thing I'd like to let everyone know, this will be available and this will be recorded coming out May 26th or May 27th. I'm going to be doing a webinar with Bloomberg covering the global agricultural situation. So we'll make this available for everybody. And if you have an interest in the global markets, make sure you get to see this, because I will be breaking down the European wheat markets. I will be covering the global perspective first and then the U.S. perspective. And we'll also have the guys from Planalytics Weather on there talking about the weather situation. And we'll be looking at this on May 25th. And our weather situation, that's 2 weeks away. It could be, we'll have a little bit more clear picture on just where we're going with the weather.
We had a question come in, and I'll do my best to answer it. It's kind of hard to know exactly what the intent of the question is. Sterling, last week we saw some crazy out of the money strikes traded on December 21 corn. So I think there were maybe some $13 and above strikes traded. Almost certainly call buyers would be my guess out there. It sounds like, and I haven't followed this myself, you may be punching some numbers in. It sounds like quite a quantity was bought out there, kind of a wild card. What are your thoughts on these kind of crazy out of the money, and I would assume call options are what's being purchased? Are you seeing any of that?
Guys buy lottery tickets all the time, and sometimes they work. If you don't have much in them, you don't lose too much. And if it works, you can buy lottery tickets for the next 20 years. And I think if you're looking at a year to do that, well, this probably, you've certainly got the launch pad for that. Yeah. So if you see people buying $9 corn calls, well, you know, you got a half a cent in it. You're only going to be wrong for half a cent. Yeah. You know?
Christy, we've been on here for a little over 30 minutes. Unless you've got some other questions, we're going to let everybody get back to their busy days. Are you sending any questions out there we can answer to wrap up?
Sure. I had one other question, and you may have addressed it. But the question was, why is new corn carry out at 1507? Did they lower usage as they did not change acres or yield? Had you addressed that one yet, or do you want to address that in the DMO?
For me to address that, I'm going to have to open up and actually read the entire WASDE. I only have the snippets and the highlights and the big numbers here.
Yeah.
But when you open up the WASDE, you'll be able to see exactly what they tweaked and changed, and I'm going to be doing that here probably in about 5 minutes. So
I'm gonna go out on a limb and guess our residual number was considerably higher. That's where you put something that you can't make any sense of logically, and it won't be that much higher. I'm kind of exaggerating, but a lot of times they say, well, that's residual. And what is residual? That's a lot of people's guess to what that is. But that's a very good question that was asked, because it is illogical to think that we decreased anything in the big three. I don't think we decreased anything in exports. I don't think we decreased anything in ethanol. I don't think we decreased anything in feed. So if we see a decrease in those three, Sterling and I will both raise our hands and we'll call somebody on that, because I don't think you're going to see big cuts there.
Yeah, residual is kind of your little operative slush fund when you have to make these balance sheets work and you have something kind of hanging out there. Well, you adjust the residual to make things look like, a number they're going to print.
Well, Christy, take us away. Wrap us up.
Yes, I want to thank you all again so much for joining us today. Just a few little housekeeping things. One, if you're not receiving any of the services that Brooks and Sterling offer, I want to remind you, you can sign up today and you can get all of these services delivered right to your email box, or you can have a phone call that comes every day, or all of it. So just want to make sure you know you can get that you can register for those right now. Also, we have our next third Thursday marketing meeting, where I'm sure these guys will talk about some of the results of the WASDE today. And they will present that next Thursday at 9 a.m. Central Time. The registration link will be in the next, should be in the next DMO, and you can register from there. If you're interested, again, just shoot us an email and we'll get you signed up for that. One more thing I want to remind you guys of, maybe just kind of let you know about, and maybe Brooks, you could join us in a little bit on some discussion here, but we have our 2021 virtual crop tour that's going to be taking off this month. Brooks, is there anything you'd like to share about that?
Yep, I do. I'm glad you mentioned this because I want to ask for a favor. We're going to kind of do a two-pronged attack here. One is I've asked some farmers and some individuals from the ag industry to kind of take some pictures, give us 5 maybe bullet points as to what's going on in their backyard, and maybe supply these to us every week or two. We'll get them out there. And the second thing is the second part of it is we are going to have just a quick survey. I promise it's going to be painless. It's going to be quick. We would love to have you participate in any of your customers that are doing that. You'll be hearing more out of Christy and our team on how to do that. But if you personally would like to participate in this, we would love to have pictures of your farm and just 5 bullet points as to what's going on. I know I'm a sucker for these kinds of things. Whenever I get the Farm Bureau magazine, the only thing I seem to look at sometimes a year are so-and-so in this county in Illinois, and this is how the crop's doing. So I think it's a fun thing to do and good to share that information. So if you'd like to participate or know somebody that would, get a hold of myself, Sterling, Christy, and we'll get you set up.
Yes, thank you. So we do have that starting this month. And so, you want to make sure that you are signed up to receive our services, especially our daily market outlook. That has some special reports in it that Sterling provides throughout the week. And that information is just key. You'll learn so much about how marketing works and how it can work with your crop insurance plan. So tune in and sign up soon. Just a reminder that today's session was recorded and it should be available in an upcoming DMO and will be available on our YouTube page. If you have any questions or need any other information, please shoot us an email at marketinginfo@sumcointernational.com. Thank you again so much for joining us, and we look forward to seeing you next week at the third Thursday meeting. Have a great day.